In this video, we are going over extra practice set number 2 for exam 3. This video will cover the chapter 20 problem, which starts on page 3. The first problem we have is a schedule of cash collections. Basically, how much cash do I receive from cash sales and from credit sales and all together in any given month or in a particular month. You're given this info about their overall sales for these months. You're told that 90% of their sales are cash sales, so they get 90% of the sales made in the current month, and they get, and 10% of their sales for any month they collect in the next month. So I would get 90% of this in April and 10% in the next month, in May. This, I would get 90% in May and the other 10% in the next month, June, so on and so forth. So, my cash sales relate to my current month. My credit sales relate to the sales from the prior month. So I have $300,000 in overall sales in April. I will get 90% of that in April from cash sales. And the other 10% I'll get in the next month, in May. So I've taken care of that. This $200,000 in sales from the month of May, I'll get 90% of that as a cash sale in May. The other 10% as cash from credit sales in the month of June, the next month. This $400,000, I will get 90% of that in the month of June. The other 10% I'll get in July, but I don't care about July, so I'm not really looking at it. Once I get any given month's cash from cash sales and cash from credit sales, I'm ready to go ahead and get the total cash for that month. The total cash is always the cash from cash sales, so the $360,000 plus the cash from credit sales, or the $20,000. Here in April, though, I have cash from cash sales. I don't have cash from credit sales. I would get 10% of the month before, so I'm in April, so I would get 10% of March's sales. However, we just started business here. I have no sales from March. So 10% of nothing is nothing. preparing a cash budget. Here we need to first get our preliminary cash balance. We're going to go through the individual items here and mark them out if they're not relevant. Beginning cash balance, $50,000 positive. So going to go ahead, I'll start there. Cash receipts. So I received cash, that would increase my cash. So add that. Beginning cash payments. Payments decrease my cash. So negative. Depreciation expense. Depreciation is not a cash item, so I mark it out and I don't think about it again. Cash payments. Cash expenses, those function very much like cash payments. Note it also says cash, indicating to you that is a payment. So now I want my preliminary balance. I've got 50,000 plus 250. Minus 120. Minus 80. Minus 40. $60,000 preliminary balance. Now I want to compare your preliminary balance versus your minimum cash balance. And I would think about loan activity, particularly any additional loan or any loan payment that I might make. So here I had a preliminary balance of $60,000. My minimum ending cash balance was $50,000. So at $60,000, I had more than the minimum. So I've got more than enough. I even have extra. I have a little bit more than I need. So if I have more than enough, then I don't need to borrow anything else. So I'm going to have an additional loan of 0. I have 60. I have to have at least 50. I've got 10,000 extra. I owe 25,000. So I'll use that entire amount to make a payment on the loan. What is the company's ending loan balance? So initially I owed $25,000 plus $0 more borrowed minus a $10,000 payment. I now owe $15,000. My ending cash balance, note that this is greater than 0, which indicates that this should be the minimum. My minimum cash balance being $50,000. My beginning cash balance, or my preliminary cash balance here, was $60,000 plus $0 more borrowed minus $10,000 paid. 60 plus 0 minus 10. $50,000, which does indeed equal the minimum, which is what I would anticipate, given that that is greater than 0. that is the end of that video. I will pick back up in the last video for the practice set on the top of at the top of page 5 with chapter 21 problems.